Hello everyone. In June, we had the RBI policy. RBI hike rates by 50 basis point on expected lines. Some market participants were also expecting a CRR hike. However, RBI allayed the concern, suggesting that liquidity will be sucked out over a multi-year time frame. The May inflation number came in at 710, lower than April inflation of 790. Now, the April to June 2022 inflation seems to be in line with RBI forecast of 740. The US inflation for the month of May came in at 860, a 40-year high, which led to Fed hiking rates by 75 basis points in the June policy. Fed is expected to raise rates by 50 basis points in the July meeting. As per Fed economic forecast, the Fed fund rate in December 22 is projected at 3.4% from the current levels of 1.5 to 175. The US 10-year was volatile during last month. The US 10-year traded in the band of 3 to 340. In the first half, it rose from 310 to 340 on the back of higher inflation and expectation of aggressive Fed rate hikes. However, in the second half, given recession concern, we saw a drop in commodity prices and we saw US 10-year dropping from 340 levels closer to 3% levels. The Indian 10-year was also volatile during last month. The Indian 10-year traded in the band of 740 to 760, where in the first half we saw rise in yield up to 760. And in the second half, along with the drop in commodity prices and drop in global bond yields, we also saw Indian 10-year yield dropping from 760 to 740. As per RBI minutes, according to Dr. Patra, repo rate should be increased or repo rate should be higher than the inflation which is forecasted 3 quarters down the line. As per RBI's forecast, the Q4 FY23 inflation is projected at 580. Therefore, based on Dr. Patra's guidance, the terminal repo rate as of now seems to be closer to 6%. In a separate speech delivered by Dr. Patra, he also mentioned that it may be premature, but there are signs that inflation may be peaking in India. And it's not the absolute level of inflation, but the change in inflation would matter more for monetary policy decision making. And therefore, as per Dr. Patra, the monetary policy action in India may be moderate as compared to rest of the world. Therefore, based on the Dr. Patra guidance and based on fears of recession, it's quite possible that we may see some unwinding of rate hikes in the next few months. 1-year OIS currently is discounting a repo rate of 675 in April 23, which seems to be higher than the terminal rate of 6% as guided by Dr. Patra. The yield curve is too steep and discounting significant amount of rate hikes. And therefore, our advice to investors is to select funds based on one's time's horizon. Given the significant amount of rise in rates over last 3 months, investors with more than 1-year investment horizon or can look to increase in funds with one step higher on duration. Given the steep rise in yields in last 3 months, investors with more than 1-year investment horizon can look to invest in funds with one step higher on duration. Investors with 2-year plus investment horizon can choose to invest in medium-term fund, dynamic fund, floating rate fund, or targeted maturity funds. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.